Okay, hello everybody, and welcome back to another video from the Investor Diary. We are, as you can see, we are trying to improve and work more on the way that we are producing the videos. And this is something that I'm learning. I mean, this is for my own benefit, for my diary, and for those who are following the diary to be much easier to follow the concepts that I'm trying to learn. So I'm trying to find ways to document what I'm learning so that in the future, when I get back to my journey, it will be easier for me to understand. Accordingly, it will be easier for anybody who's following to understand as well. So, without going too much into this explanation, let's move into our next topic, which is the win-loss ratio in Forex trading. This is something I talked about briefly in the last video, and we took a look at my own win-loss ratio, and we said that we are going to discuss it in the next video and how to improve on it. But just talking about it as a number and then me explaining what I'm going to do about it, I felt it's not enough. We need to go back to the basics of what is win-loss ratio and the topics around it and the import and how do we deal with it and what is its role in the whole context of forex trading. So what we're going to do today is we will understand what is win-loss ratio. We will also look at how to calculate win-loss ratio. We will discuss the general concept of the calculation and see what is an easier way to do this. What is a good win-loss ratio? Is there something called a good win-loss ratio in forex trading? We'll also look at my own win-loss ratio in the trading plan that I'm testing. How to improve the win-loss ratio in general, and my plan to improve my own win-loss ratio. So these are the things that we are going to look at, as well as advanced strategies to improve the win-loss ratio. So we are going to move on those one by one. And let's start with the concept of what is win-loss ratio. The concept is that in total, in the total of our trades, how many of them lost and how many of them won? And then the relationship between both. So how it is divided. So in 10 total 10 trades, if I won 6 and lost 4, so what would be the ratio? Okay, and therefore we come to the question, how do we calculate it? So in general, we would say, for simplification, if with every 6 trades I lose 4, but there is a simpler way that this 6 and 4 can go down to lower numbers by the calculation. Is it important? It is important, but there is a but here. Win-loss ratio is not really a target, it's an indicator. Win-loss ratio, why I'm saying that? Because we might have losing trades more than winning trades, and it would be okay. Why? Because it is connected to our risk management rules. So if, for example, we talked about the RRR, the risk to reward ratio, and the concept of how much am I risking in one trade. We discussed all these in previous videos and previous articles. So this is connected to that. So if my RRR is at least 2 to 1, for where that means if all my trades have a fixed RRR of 2 to 1, that means I am profiting more than twice than what I'm losing. So let's say I have a risk per trade of 0.5% on $1,000 capital. That means I will be risking $5. So in every trade, I would be winning $10 and risking $5. In total, if let's say we had the numbers that we talked about, vice versa, we had 6 losing and 4 winning. So if we won 4, that means we won $40. And if we lost 6, 6 times 5, that means we lost $30. In total, we won $10. $10 out of the 1,000, that means we won 1%. Okay? Which is great, a 1%. Even if it was on a month, I mean, there is no business. Yes, there is 12% a year, that's fine. But it's a very lucrative business to have 12% in a year as a return on investment or as profit. So this is the concept of what is win-loss ratio. Moving to how to calculate the win-loss ratio, I think we need to move to simpler terms, because there is some mathematics into that. I will move, I actually prepared an explanation from DeepSeek, and I think it's a very simple explanation. Let's say in a class of that has 12 girls and 18 boys, what is the ratio of girls to boys? And we'll replace that for winning trades and losing trades. So we identify the quantities to compare girls and boys, which are winning trades and losing trades. So the girls and boys are 12 to 18. These are the abstract numbers that we got. To simplify it, what we do is we take the greatest common denominator. This is the GCD. The greatest common denominator between those two numbers. What is that? So what is the number that both these numbers will be divided on without any fractions? So it is the number 6. So if 6 is the common denominator, what we do is we take the first number and we divide it by that common denominator, by the greater common denominator, and we take the second number and we divide it by the same number, which is the greater common denominator, and we get the ratio, which is 2 to 3. So imagine those are our trades. So in total, we had, so 18 and 12 is what? 30. So we have 30 trades. Of those, we have lost 18 and we won 12. That means our win to lose ratio is 2 to 3. Okay? So when with every 3 losses, we have 2 wins. And with our example of having 2 as an RRR, risk to reward ratio, that is a very good when we talk about good. So now, therefore, the concept of good, it depends on the risk management rules that we have created for ourselves. What is our risk management plan? What is our management plan? And accordingly, the win to lose ratio, if it is good or not good, it will depend on that. Not only that, we will see. So what is that? How to calculate it? Okay, this is the manual way of calculating it. There is another way, which actually it's not, let's go, it's not me being clever. Actually, I took this from DeepSeek as well. So we count if the range. So I have, so this is the column where I input the losses, the deleted, and the wins. So the numbers are, so I count which ones say lose or win in this case, and which ones they say lose, and they count them. Okay. Now this formula is the one that takes the common denominator and makes the ratio. Okay, so today my ratio is 17 to 6, meaning when every 17 losses, I win 6. Currently, for me, even with my very strict risk management and money management plan, this is not good because I am down about $23 from the 923.5. I am down to 999. So I am down what? 23. Yes, $23.72, which is about 2%, 2.5%. Therefore, now I need to actually improve, uh, find ways to improve the win-lose ratio. And this will take us to our by the way, I'm keeping this, so if anybody wants to pause the video and take the formula. uh, I am not sure if I copy it and put it in the description. I will try to do that, but I'm not sure if it will take it. But if it did, I will for sure put it in the description. Okay. Now, going back to our topics. So this is how to calculate. We have two ways: the manual way, the one that DeepSeek told us, DeepSeek, ChatGPT, whatever. I'm just relaxed with DeepSeek because it's for free and it doesn't have the limitations that I need to upgrade to have more conversations or more messages. Okay. So what is a good win-loss ratio? This is something that we talked about. Win-loss ratio, good or not good, depends on the risk management plan that we have. And with that risk management plan, are we with the actual trades, are we winning? Is it allowing us to win? So is the problem with the risk management plan or with the strategy or with the trading plan itself? Remember that to be in an article that I wrote, how to become a successful trader, there were two pillars. One is the risk management plan, and the second is the trading plan. So the question is, which one? In my case, I need to enhance my trading plan because my risk management plan I'm very relaxed with. With all these losses, I'm only 2.5% down. I mean, a huge amounts of losses, okay, in this trade. And there are ways, and we will talk about what's happening with my trading plan and possible things that I could improve. And here we go. My win-loss ratio is the 17. Um, I forgot the number. Is the 17 6 to 17 is really very high loss ratio and very low win ratio, uh, and I need to improve on that. So what are the ways to improve on a trading plan? The ways to improve on a risk management plan is obvious, and I have really talked about it a lot, and I will not go through it in this video. So, how to improve in general the win-loss ratio? We have two ways. Either we say that our trading plan, and this is saying it's not the problem of our risk management plan, there are things that we need to improve in our trading plan, and this is our assumption. Okay. So the RRR is good because the RRR that I'm using is not 2, is much more than 2. I have 9, I have 12, I have 10. There are some which are 2, but there is nothing below 2. So to have such a win-loss ratio and having after all this RRR and the risk per trade, which is as low as 0.5%, things should have been much better. So the problem that I am facing is with the trading plan, and this will be our assumption in our explanation. Our assumption is that the problem is with the trading plan and not with the risk management plan. We have two general scenarios. One scenario is to actually change the whole trading plan. It's not working. I mean, to say I need another one, a totally different one, a different school altogether. For example, let's say I am using now SMC. I would think that the classical school, which is using support and resistance, Fibonacci, trend lines, putting them together, and this I will feel more relaxed with that, and I can control my win-loss ratio in a better way. So changing the school, changing the whole trading plan basis. This is one scenario. The other scenario is to improve on the existing plan, to see what things could change or to add or to delete from this plan that could enhance or has a hand in resulting in such high loss ratio. I tend to go with the latter one, which is improving on the current plan. I have a concern in changing the whole strategy or the whole basis out of the fear of moving from one idea to another. Uh, Jumping from one strategy to another, this thing is not working, let me move into the next. And because of 10 trades did not work, there might be some market conditions, there might be some other reasons why things are not working at the current moment because of market conditions. I really need to test it for a good while. What is a good while? For me, I tested this for about 1.5 months, and I think the amount of trades that have been um, that opened and closed are enough to give me an indication. Okay. And the dynamics that the trades went in and the way I was watching them, monitoring them, I think I need a change, but not a change of the total plan. I'm not too much into that thought. I'm not saying it's wrong, because at times we might think of a whole change of the plan. There is a time to do that, but we need to be careful not to move from one plan to another just because few trades did not work, or the first couple or three trades did not work, and say this is not working. We need to give it its time. Okay. And to make sure that we are implementing in the right way. So this is why I say before even going to demo, we need to go to backtesting. Backtesting is not only to see what are the results that are coming out of that plan, but actually to give us the chance to train ourselves into implementing the plan that we are testing, because we need to become proficient, fluent, if you want, in implementing the plan. There are things that we need to be careful. Am I really drawing the line if it is classical, if it is on the classical school? Am I drawing the trend line correctly? Is the support and resistance right? In my case, in the SMC, am I really watching the inducement minor and major in a correct way? Am I really looking at the points of interest and drawing them in the right way? There are so many other questions. There is the difference between pending orders and spot on market prices. So there are these things that we need to improve in the way we implement our trading plan that we're testing. So back testing will give us the experience into how we implement this trading. Then we move to the demo and we see how we're doing with that. Okay. And not to forget one very important thing is that when we learn or when we take a trading plan from someone else, from a book, from a YouTube, from a PDF, whatever, a friend of mine told me about it, I need to backtest it to see if it suits me, and then to add and delete stuff to make it my own. At the end, this plan needs to be my own and not just bring it from someone else and then just implement it literally. At the beginning, we need to do that for the training sake. Gradually and during the backtesting, we need to keep backtesting until we see that this plan is ours now. We have added, deleted, changed things in the plan that we make it ours. Okay? So to improve the win-loss ratio, we said we have two major strategies. One, change the whole plan. Two, change things within the plan. Okay. My plan to improve my win-loss ratio. Let's go back and I will show you. Let's take the Euro USD. I think it might be a good USD. Yeah, the GBP USD. This is the 1 hour. Ah, interesting. This wasn't like this today in the morning. Now this causes this is a BOS, a break of structure. So it broke the lower end, and it's downward trending chart, and it broke the lower one. So that means we have a new trading range from this top, and the inducement will be at this moment at this level here. This is the nearest pullback here, and we're still waiting for a confirmed low. So until this inducement, if it is this inducement, is hit, or we have another low and another pullback, we will move the inducement downward until that inducement is hit, and then we will have a low. So let's go back to other. Okay. So let's look at this scenario. What I used to do, so this was the range from here to here, okay? And then once the inducement is hit, I would put the POI, where in this case is an order block, and right away I would put a pending order. I will not wait to see a reaction, okay? Because I don't know when that would happen. So one of the things, sorry, excuse me, one of the things um, that might affect this is that instead of having pending orders, to have on market orders, to wait and see. Of course, I might lose an opportunity, but losing an opportunity, I think it's better than losing real money. So I lost a chance does not mean I affected my balance directly. Yes, I affected my balance directly. If I lost a winning trade, I could have increased my balance, but I can catch it somewhere else. This is one way. Another way is to add other indicators to give me more confirmation about the trade. One of the things that I'm thinking about is this indicator. This indicator is called JS climatic volume. In general, I don't like indicators. There is a general strategy where I try to avoid. I try to avoid things that are related to other people. An indicator someone is updating or taking care of, a signal someone is giving. So when it depends on other organizations or another person, I don't know what will happen to that person. So what if that person got sick? What if that person stopped updating this indicator? What if that person, for whatever reason, stopped giving signals, or even his signals stopped being profitable? I then, my psychology would be blaming that person, not blaming my own plan. And there is nothing to improve. There is, I mean, when we talk about improving our own win loss, and if I'm getting signals from someone else, whether real signals or signals through an indicator, let's say an indicator tells me sell here, buy here, and I'm depending totally on that indicator without my own plan instilled. So if something wrong happened with that indicator, then I have nothing to improve. So this is my opinion of this topic. So in general, I try not to, but I like this indicator a lot. When I was introduced to it, this is a volume indicator. So this candle is a volume. When we see a green candle, this is a volume, but we also, it needs to be with tails. It cannot be without tails. There was a name for each one. I forgot the names now, but the one without tails, it's not a volume per se. It is, they call it an indicator that there could be a change in the trend, whether if from going from an upward trend to a horizontal or going down, there is an indication of a change of direction. But one with tails takes the features of a support and resistance, so we can deal with it. So if the price breaks above it, that it it might say, most probably it's saying that the price is going up. The same thing if it broke down, and some even trade the range or the area within that candle. So that candle is taken totally from tail to tail, and some people actually trade that range. This indicator works better in lower time frames, because when we move to higher time frames, it's not that frequent as in lower. I mean, if we move to the daily, even we might see a few only. See, in all this area, there are only a few. In the weekly, I don't know if we will find any in the week. Yeah, well, we did. So, yeah, in the 1 hour, in the 15, we will find more, in the 5, even more, and so on. Okay? So, this is one thing. The other thing, I could wait for both, not having a pending order, and wait for a volume to appear. Okay, so this is another thing that I might be thinking of. There is another thing that I've noticed when I was trading this plan, that the floating balance is always positive and high. I mean, positive in the high range. I mean, ranging between 2 to 5% of my capital. And I would keep it floating until the trades show either take profit or go to stop loss. In most of the cases, as you have seen in the win lose, they went to lose. I mean, even trades that were approaching the winning, they wouldn't go there, and they would just break structure. Sorry, one more time. I think I should have put a glass of water beside me before this. I didn't think it will take that much of an explanation. Anyway, moving on. So, currently, out of those three options, one is having pending orders, two, depending on volume alone within the SMC, three, we have four options. Three, wait for a volume at the point of interest and wait for it. See, I'm using the free version. I use the free version, whether it is TradingView, it's the back testing environment. I mean, unless I really need the paid version, I would go for it. So, and this is the third one, waiting for a volume at the POI, at the point of interest. For example, in this case here, in this order block, which one? Where is it? Yes, this one. I would wait for an order block, and there was one actually here. There was an order block here. And this order block, if I waited until then it would tell me that it did not break this. Therefore, it's not going down, and it stayed within its range. And it at the beginning, it went above it. So I might actually take a buy on this one. Okay. But based on the SMC, I will not, because the SMC is telling me that this is downward trending. Okay. See, this is a change of character to, it's a bear change of character. But at least I will not take the sell. Why? Because it broke above the range, went back not only to retest it, but went to the middle of the range and went back up again. So this waiting for a volume at the point of interest will give us more information. Now the question is, would I be able at this time to be there on the screen? Let's see, what time was it? It was 12 p.m., which means, is it p.m.? Yes. It was 12 p.m. on TradingView time, which is, I think it's 7 p.m. my time. 7 p.m. my time, I won't be on the screen. I won't be there. My time on the screen is way in the morning. It's around 6 a.m. on TradingView. And the last option I was explaining to you is the floating. Wait for the floating to have 2%, 3%, and close it. Close it at that. So I am devising now a plan based on the floating, and this is the option that I'm going to take now. At the same time, I'm looking at the volume and see if I can actually integrate it. But primarily, I'm going to look at the floating trades. If they reach during the week 5%, I will close them. If I am on Friday and I have any positive trades, I will not leave positive trades over the weekend. If they were negative, I will leave them. This contradicts a general philosophy in trading, to keep your profits going and to cut your losses short. I'm covering that in my RRR. Okay, I'm covering this concept in the way I deal with. Look at this. This is 3, this is 4, this is 5, this is 2.91. So I'm covering that in the RRR. But in the total trades, the total floating, if I find 2 to 3%, sorry, if during the week I found a 5%, I will close it. But still, I'm contemplating if I should wait for the 5%, or should I, at least at the beginning, for my own psychology, let's say, to keep it conservative at 3% and close them all. I'm still contemplating that and haven't arrived to a clear decision on the plan. I'm going to see how things will go and see where am I between 3 to 5. Okay. But on Friday, I am. Uh, I have made my decision to when I open my platform. If I find in the morning I open the platform, if I found, oh, on Fridays I actually open them in the afternoon. If I open the platform and see any positive result, I will close all floating trades on that positive result and start fresh on Monday. This is what I'm planning to do. My objective is to better this number. This strategy will for sure affect another number, which is the RRR, by the way. It will affect the RRR, but I'm depending on the total number of wins. If I improve them, it's better than what's happening today. Okay, so this is what I will be doing, and this is my plan. And what I've just explained now are actually advanced strategies in improving the win-loss ratio. Looking at the details of your trading plan and see the nitty-gritty details of that plan and how you can enhance it and work it in a way based on the times that you can be on the screen, based on your observations. For example, observing the floating trades and making a decision on that is one of the very advanced strategies that, for me, I'm happy that I was able to come up with this observation. I'm not telling anybody that you should follow these strategies. What I'm saying that these are examples of advanced strategies to improve the win lose or the win loss ratio. So I think this is it for today. We have covered the win-loss ratio in full detail. This video will be embedded in an article, or actually, there will be more than one article covering, because we have covered a lot of ground with the win-loss. One article would not be enough to cover all these aspects, because every single title of the titles that we discussed is a topic on its own when it comes to writing. So this video will be in all these, are embedded in all these articles. I hope I will remember to put this formula for you, this one, in the description, if I was able to, if it allowed me, if it took the but I'm not sure if this will make sense to you, the AF2. I'll see if I can put an explanation to that, because see, this is this AF and the AG is this AG. So what we're doing is, oh, and look at this. There is a function inside Google Sheets. This is Google Sheets. I don't know if this will work in Excel. I have no clue. Most probably it will, but I'm not sure. So we took AF2 and divided it by the greater common denominator of both AF2 and AG, which is the win and loss numbers. And I don't know what all this is, and the quotations, the colon, the quotation, and the and again. We took the G2 now, the AG2, the loss number, and we did the same. We divided it by the great common denominator. So coming back to the video, if you forgot what that formula, how that formula works, if you got the description, just get at this time of me explaining this formula, and you'll be good to go. Okay, thank you very much, and see you in the next video. Since we have covered the win-loss ratio now, totally, we'll see what will be our next topic going forward with the test of the trading plan. My assumption on the next topic is that we'll see if what I'm doing, I'm going to give you the progress, or to give myself the progress of the changes that I'm doing. Actually, today I opened a trade based on volume against the SMC direction. How is that? I'll show you. Let's not close the video now, because this is something that we might be discussing in the next video. Let's have a taste for it. It was on the NZD GPY. I took two trades today. One is sell, one is buy. So the direction is a buy. So the SMC direction is going up. So this is break of structure upward. So the 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 trend is going upward. So the POI is this order block. I can't take this order flow. Okay, I mean, it's mitigated before the inducement. It is just breaking all the rules. So I took this order block and and I took it as a pending order. Now there is a volume here. See this volume here. It broke below it. I took the retest. Okay, it broke below it. Why did I take it? Because if this trend is going to go to the order block here to have a direction upward, to continue its upward direction, then I would be winning this trade. If this direction went here and did not respect this order block and went down, at least I will be having a 2-to-1 ratio that I will be covering this one. Okay, let me show you how much I'm risking on each and the RRR for each. Well, the RRR here is 4, this is 2, and I'm risking because I said in a previous video that I am using a dynamic risk per trade, which is 0.5% to 1%, but I never reached the 1%. Let me show you these two trades here. Okay, so this one, the yellow, that means it's open, it got triggered, and this one is still waiting. So this is on an H1, and this is my log. This depends. This confirmation is only on volume, and this one is on an extreme order block with a major inducement. So this one I'm risking $4.63 because my account went down, as you saw, to 8.99. And in this one, I am risking the one that is open, I'm risking 4.29. So if the 1 to 2 got the 2, that means I'm gaining about what? I'm profiting 8.60, 58. So 8.58 on this trade. If this one lost, I will be losing 4. So in total, I will be winning the 1, okay? Which is 4 point something. So this is my thinking, and see, I put the open trades here, and I include on the closing date, all of them. Okay. So another thing, remember that I told you my plan is to close all floating. I started that last week, and I closed on Friday all the floating ones because they were positive, and I would put a note that this was a bulk close, not close based on TP. Okay, so thank you very much and see you in the next video. This video has been a very long one, but explaining yes, a simple concept, but it has its complexity. So see you in the next video, and let's see next time what will happen to the improvements that I'm trying to do on the win loss ratio in the trading plan that I'm testing. See you then. Bye bye.